Hey guys, so we have so far covered a lot of grounds on the Yahoo Finance Stock Screener. We have covered almost everything except um, market data and ESG. So market data I'll come in the last video, or maybe I will continue this video and include market data. But before that, I will uh, be talking about the ESG and why. What is ESG and why is it important, and why does you as an investor even care about ESG? So basically, ESG stands for environmental, social, and governance scores. So basically, um, ESG matters to investors for reasons that range from the financial performance and risk management to regulatory pressure, and also for personal values. So it is like no longer viewed strictly as doing good. It is increasingly viewed as material information that impacts a company's ability to generate long-term and sustainable value. So by motivation, if we break down why ESG matters, um, the top number one thing that it is used is for risk management, which is like the defensive case, and then also for the return, because ESG factors can identify competitive advantages and growth opportunities, and then also it the motivation. If we just go deeper into the motivation part, the cost of capital and valuation, because ESG performance increasingly affects how the market prices a stock. So how is that? Because lower cost of debt, for example, so the banks and bond investors now offer lower interest rates to companies with strong ESG ratings. So in the UK market, if you go and let's say find mortgages, for example, they have a separate line of mortgages, especially for, they are marked as like green mortgages. They're special product for green products, and also higher valuations like institutional capital pools like pension funds, sovereign wealth funds. They are restricted from buying a low ESG names. So they have special mandates given to them by their the clients, reducing demand and suppressing multiples of non-ESG investments. So also the companies can struggle due to regulatory pressures. There are a lot of regulatory pressures around different regions, and also there are value alignment issues. And in summary, if we just break down why is environmental, social, and governance values or governance scores matter, then we can say number one motivation is the risk. So basically to avoid fines, spot scandals. Sorry about that. So yeah, the motivation. Um, yeah, so the number one motivation is risk, which is to avoid fines, avoid scandals, and to protect yourself from the regulatory shocks, and also the return, because then there can be opportunities as well. You can identify innovation, efficiency, and quality management. The valuation part of the motivation is to access to capital. You get lower rate of debt, and you might get opportunity for various index inclusions. Regulations, legal compliance, and fiduciary responsibilities, they impact the stock. Then there's a thing about values, which is to align money with the personal or your institution missions, and and the signals, basically front run changes in the market sentiment, if you think it that way. And so basically I mean, it's you can argue that ESG is not as important for investment decisions, but I would say ESG can, if not number one, then it should be one of the top 3 priorities in your investment decisions. So that was everything about ESG usage in the stock screening, and then we can move on to the market data. So in Yahoo Finance, if you go to the market data tab or group, you can see there are a bunch of screener columns which you can use, and these screener columns can be classified into, I think, 6 or 7 categories, which will be, number 1 will be the stock identification category. Then you have the price or performance category. Then you have volume and liquidity category, and then you have valuation and market profile. The 5th category would be the financial health and profitability, and then the 6th category will be the revenue or the efficiency, and then you can have the 7th category will be the other technical indicator like RSI 14 relative strength index indicator. But if you go into each category, the number 1 is the stock identification basics. So a lot of these things like region, index, symbol, and then the name, the exchange where it's listed, and then the sector or the industry, the sector and the sector and the industry, and also the peer group. So these are all the identifications column. So they help you identify and locate the stock, where is it listed, what sector, what industry it targets, and obviously the name, symbol, index is basically the stock market index. The stock is the component of. So if you want to know whether your stock is the stock you're select, if you're only interested in, let's say, S&P 500 or Nasdaq 100, Russell 2000 stocks, in your stock screener you can say that, okay, I want stock that are part of these indexes, and then you will only see those stocks. And region, like you can those are the geographic region of the company. Then also the peer group, which is a set of companies considered as comparables. Now these can be, they are mostly right, but sometimes you can argue they are not like the peer group, but they are often based on industry, market cap, or the business model. And the sectors and industry are basically they have the categorization based on GICS, which is Global Industry Classification Standard. It's a very standard classification used by everybody in the industry, like all the major players, Reuters, Bloomberg, everybody. And the exchange, which is the stock exchange where the security is listed, could be NYSE, NASDAQ, London Stock Exchange, and so on and so forth. So that was the number one category to identify the stocks. Yeah. Then we have the price and performance data columns. Number one is intraday price, which is like the current live price during the trading hours. Then we have end of day price, and then we have this thing, all-time high price. Now this is the highest price the stock has ever traded at. The stock has ever traded at historically. So from the beginning, from the day the stock was launched in the market, what was the highest price the stock has ever traded? And then you can also have this all-time high date. What date was when the stock reached that highest price? Then more important is this 52-week high, which is kind of standard for the industry. What was the highest price in the last 52 weeks? And then we have then we have the volume or liquidity metrics, like volume, which is the number of shares traded during the current session, the intraday volume. And then we also have the end of day volume. Now end of day volume is the total shares traded during the previous full trading day. So if if I'm looking at the end of day volume today, that will be the total number of shares traded yesterday during the entire trading day. We also have this average volume for 3 months, which is average daily trading volume for last 3 months. It is used to gauge normal liquidity. You won't be typically interested in something which has very low liquidity unless you actually know that, okay, I mean, after some time this is going to shoot up or something, which is like rare. But this is important in that case. We also have relative volume for one day, this thing. So what is relative volume? It is the current volume divided by average volume over a recent period. So let's say, so today we are relative volume for one day will tell me what is my current volume right now divided by the average volume for today, divided by the average volume for today. So if it is like 1, right, so that is 1 or greater, that means it's higher than usual, and if it is less than 1, then it is lower than usual. Now we also have this thing, short interest. This is the total number of shares currently sold short and not yet covered. This is a very important metric because basically this is kind of an indication why, but by the way, this is all like a short-term indicator, but this is like if the market is losing interest in this particular stock, then the total number of shares that are sold short and not yet covered. So basically, if I short a shortable stock and I don't have any other share to cover my short, then it is it is called a short without a cover. So it is this thing represent that. And then we have short interest or let's say the short interest ratio, which is the short interest divided by the average daily volume, right? So the short interest, which I just discussed, which is the total number of shares currently sold short and not yet covered, that divided by the average daily volume, how many days it would take to cover all the short positions. So right now there are some short interest, right? Let's say it's 100. Let's just take a random, and the average daily volume is 10. So it will take 10 days to cover all the short positions. So that is what the short interest ratio tells you. This is also a very good metric. Now we also have the short interest percentage change. So this is basically a percentage change in short interest from the previous reporting period, right? So whatever was the previous reporting period, from that time to today, what is the percentage change in the short interest. Now we also have this short percent of float, that is percentage of companies freely trading shares currently sold short. What percentage of the total freely trading shares are currently sold as short. Then there's this one, short percent of share outstanding. That is a percentage of total shares outstanding that are sold short. So it is slightly more conservative than the percentage of float. Yeah. So again, this is a percentage of total shares outstanding that are sold short, right? So those were all the volume and liquidity metrics. Then we have valuation and market profile metrics. The first one being market cap, which we might have discussed many times, which is basically the total, the intraday market cap is basically the total market value of the company's outstanding shares. Take all the number of, the number of shares multiplied with the current share price, that gives you market cap. But we also have something called beta, that is 5-year monthly beta. So this is measure of volatility versus the overall market over 5 years. This of in monthly intervals. So basically, if you get a value of 1, that means that is moving with the market. If it is greater than 1, then it is considered to be more volatile, and if it is less than 1, then it's less volatile. We also have in this section we have covered valuation and market profile here. Now financial health and profitability section, we have EPS, which is earnings per share. I think that's not, we have discussed that earlier in the first video, but earnings per share is a very, it's not listing it in the market data, but basically, you can consider it as a part of market data. It's net income divided by weighted average shares outstanding, without any dilution. And is there anything else in this part? I think no, I don't think anything else we have missed here. Now in revenue and efficiency, we've got total revenue for this fiscal year, and we discussed this in the evaluation video as well. And that is basically the revenue from the most recent full fiscal year, and then we have quarterly year-on-year growth revenue, and then 1 year % change in total revenue, which is annual growth rate in revenue. We also have revenue per employee. Now I'm not sure if these all should be considered market data. This is actually part of valuation, and we have covered these before, but I think there can be, this relative strength RS, RSI 14 indicator. So it's kind of a momentum oscillator measuring speed by the change of price moments over the 14 period. So RSI 14 means 14 periods. So if you get like 0 to 100, no, I mean if this is the scale is between 0 to 100, if it's greater than 70, mostly, I mean, you can say it's overbought, and if less than 30, you can say it's oversold. But use this with caution, because it doesn't always work, and you can have relative strength index over different periods as well. So I think that covers each and every indicators that we have in Yahoo Finance in the stock screener section. So that gives us a very solid foundation on screening stocks, and not only screening stocks, like valuing the company. It gives a good background on the risk, the risk on our books, risk management stuff, and all that. And by the way, this is all free information. It's all there in Yahoo Finance. Although, I mean, there are very, you can find a lot of paid content as well, which is a lot more reliable. But this is good enough. Like, Yahoo Finance is a good enough source to find all those screening information, especially for companies if they are like, they are trading on exchanges. Then you will get good enough data in Yahoo Finance. So that was everything, guys. I will continue making further videos on the finance, because I have I've been planning to make some more videos but I don't have the date when I will be making my next video. However, please subscribe to my channel. I'll see you later. Bye bye.